Good morning, everybody. Thanks for tuning in to our MMG weekly recap. So we're down 9 basis points on mortgage-backed securities. You can see a little green candle. So we open lower. We're moving our way back. We're trying to stay above 101, which would mean that would be about as bad as rates can get. So because resistance becomes support. We couldn't get above 101. Getting above it would be really nice. So we're fighting for a two-day close. 10-year notes, 445. It was 437. I was sipping coffee a couple of hours ago. So it's already moved from 437 to 445. We don't want to see that go above 450 today. That would be really negative after being 437 overnight. So we have to watch that carefully. But a two-day close beneath 450, then all of a sudden 450 becomes what they call yield resistance, and that could be about as bad as rates can get. Now, today, not a lot of news. We had a housing numbers, starts and permits. Backward looking, the starts were actually pretty darn good, and that was in a month where we hit 8% mortgage rates. Those will only be better. It's almost like you have to think about what do readings look like after this rise in prices and this decline in rates, because this is going to invoke an entirely different, more bullish sentiment on housing. We have some Fed folks out there today. I mean, they're going to talk because they're going to talk. The markets are pricing in 4 rate cuts next year, and Fed officials aren't balking right now. Oh, we don't know. We're not sure if we're there yet. They're going to don't expect them to circle the wagons and claim victory on inflation, but inflation is going the right direction. Now, looking ahead to next week, first off, it's Thanksgiving. We may have gotten it a week early, but it's going to be a short week, right? So there'll be thin trading. Markets close obviously on Thursday, half day on Friday, but we do have a couple of big auctions, 20-year bonds and a 10-year TIPS auction. Those have to go off, and we know those have been a problem. And what will be interesting, again, as we shared last time, that 30-year bond auction was awful a couple of weeks ago. If it's bad, we could lose some pricing. And then we have the Fed minutes on Wednesday, which should be really something, because again, it's going to be like a short week with people away from the desk. So there'll be a lot of volatility. You should lock loans that are closing relatively soon. But if you have loans that are brand new walking in the door, obviously the longer term stuff, we'd like to see if we could stay above 101 and the 10-year notes get beneath 450. And we would use those really tight stops as a way to, like, if we go back below it, you lock and let's not play games, because 101 right now, it would be really bullish if we can get above here. We'd like to see if that can happen. We'll be back at it later. If things get crazy, have yourself a great day, and we'll be talking to you soon. Bye for now.